Good morning, I'm Christy Duffy, and today is Monday, April 19th. Here's what's in the news this morning. The Wall Street Journal is reporting that profits at banks with business models similar to Goldman Sachs may also be curtailed if the case against Goldman leads to a push for more transparency and regulation. Others that may be affected include JP Morgan and Bank of America. Bloomberg News are also reporting on Goldman this morning, saying the bank may face scrutiny from the UK and Germany as well as a result of the SEC civil actions. Bloomberg's also reporting that according to people familiar with the matter, Goldman Sachs knew about the impending SEC case for 9 months and never disclosed it in any financial reports. The Associated Press is reporting that Treasury Secretary Geithner is predicting that a strong overhaul of the financial system will be passed by Congress, and it will help protect taxpayers against abuse and fraud in the financial industry. The New York Post is reporting on Radio Shack that the company is still up for sale despite denials from the company. Private equity firms are said to have interest in the gadget retailer, and Best Buy has been mentioned as a possible acquirer. The Wall Street Journal reporting this morning that the FDA is considering the merits of halting a safety study involving thousands of patients taking GlaxoSmithKline's Avandia, which is a diabetes medication. Out from Barron's this week, after its sharp decline Friday, Goldman stock is trading at just 9 times its earnings, a discount to its peers. It may take some time for the cloud to lift over Goldman, which emphatically denied the SEC charges of securities fraud. The sharp drop in Goldman stock appears to be an overreaction, according to the paper. The one-day drop in the company's market value by $13 billion, down now to $87 billion, handily exceeds estimates of the losses Goldman could face. Goldman now has one of the lowest price-to-earnings ratios of any large company in the S&P 500 index. Bottom line is that patient buyers of Goldman stock will probably come out ahead, but given the company's low valuation and the likelihood that even a defeat at the hands of the SEC probably will be financially tolerable. And Bank of America said on its conference call that it believed the worst was behind it and expected an economic recovery to continue. Still, it's not surprising that there was some profit taking on Friday. The stock has outperformed many financial peers this year, gaining 86% in the last 12 months. And it wasn't a total blowout quarter. But fundamentals continue to look up for the company, and the most recent quarter shows that things are pointing in the right direction and are ready to pick up momentum. Barron's also reporting on BNY Mellon and State Street have dominant businesses with high returns and limited competition that ought to benefit from stronger markets and higher rates. With investors now favoring weaker banks, Barron's says buyers can get these durable franchises at very attractive prices. Tech stocks should produce more good news, according to Barron's, and Goodyear, Fortune Brands, Whirlpool accounting tricks may backfire. I'm Christy Duffy for Smart Trend News. For more on these headlines, visit theflyinthewall.com. You can also receive this report of what's in the news every morning here on our YouTube channel, Trade the Trend.